Good evening, everyone. This is Tom Alexander. It is Tuesday. It is 5:52 p.m. Eastern Time in the U.S. in Charleston, South Carolina, where I am. And I want to do a quick report because today may have given us some signals that, at a minimum, the trend that has been in effect since the low here. Let me get my screen going. Okay, we've had this furious rally since the 12th, the low on the 12th. And you can see this is the futures contract. I'm going to show the cash market in just a minute too. I have several things that I want to go over here. But we had this, we've had a ramp above this high, which is not too unexpected. There are numerous divergences at the moment. I'll go through that, but let me, and I apologize because this is sort of all off the cuff type of thing at the moment, because I do have a lot to cover and I don't have it ordered particularly well, as you're finding out here. But we reversed today pretty sharply from today's session high and closed on the lows following this incredible ramp off this October 12th high that had, from low to high, carried about 6.3%. Now, we've had several rallies since the March 2020 low that have exceeded this in magnitude. I don't know about time and magnitude, but this is stretching the envelope. And from an auction market perspective, what is going to happen is you're going to get a more two-sided trade. Now, did it begin at today's high? You can't really say until after the fact, but the evidence with today's reversal and some of the other things that I'm going to show you would suggest that that is the case. That doesn't mean, now the significance of this top is yet to be determined. That can't be determined in advance. I think, though, that if this is, I think if today is not a top, that a short-term top is likely very soon and not far above today's price highs. And I think that what we'll see is more of a balance, something like this over the next several days at least. How much retracement that includes would be a guess at this point. I'll give you some candidates for downside levels that we want to keep an eye on. And this is the ES futures contract. The general guideline and a trend is in an uptrend, and this applies not only to stock index futures, but anything you trade as gold, crude, silver, the dollar, the euro, anything. If it's in a strong trend, it's the previous day's extreme or the second day back extreme that tend to hold any retracements. So in the case of the ES here, you really have several lows sort of clustered together. So that would be the area that I would keep an eye on in the ES. And that's 45.22, 45.03. Be a little bit surprised if we just rip through this area without some pushback. This is also an area that would be a candidate for a downside balance area extreme. And then we would trade under that type of scenario. We trade between a low somewhere in here and a high somewhere in here, maybe for a few days or even longer. Okay. Now, I'm going to show you recent precedents for this, what I'm looking for, sort of expecting here. So this is a 6.3% move. We've had several similar situations of various magnitudes. This was a very, very strong move that actually traded at about 8.5% before it became two-sided. And then indeed, it did become very two-sided. It became two-sided. We formed a balance area, it broke higher, and then it still remained very two-sided before there was a larger degree retracement from a high not too far above the high here. Okay. Then we had another similar situation here where we sort of peaked out in terms of the conviction of the initiative move at around 5.4%. It became two-sided and choppy in here for a few days, and then we had a deeper retracement. Same thing here. And what you're seeing here most of you know, this three-step process of development that all auction markets follow on all degrees of time is your friend in understanding it. So the three-step process is you have a trend, you have development around the trend, and then something breaks up or down from there. And you see this over and over and over again. And it can be a very friendly guide. Now, we may go higher. We can go a lot higher than this, but we're not going to go higher at this rate of change. The market is strongly regressive to trade facilitation. Now, when I say regressive, I'm referring more into its mode, whether and away from this strong conviction day after day after day that includes all these gaps. You can see the gaps on the cash chart, and I'll show you that in just a minute. So what we're really looking for at a minimum is trade like this, as opposed to trade like this, that's just straight up. And that should affect your trade strategy. You're looking for a more two-sided market. You're just as willing, depending on your time frame. If you're a day trader, you're just as willing or more willing to sell it than you are buy it. But if we get down into these levels, then that might be an opportunity to buy it. If you're a swing trader, there are all sorts of scenarios. This is not a video on trade strategy and how to trade in tactics. So the tactics and trade strategy that you use with auction market principles as your base methodology is only limited to your imagination, your level of experience, your account size, etc. So, I can go back and show you examples for years of how this plays out, but it always plays out the same. Now, to give you an example of, the market could go a whole lot higher, but if it does, it's not going to go as high as the same rate of change, is this move off the November low. Now, the November low, it carried 10%, and then we had a little minor balance area that formed, and then we had this grind higher. But during this grind higher, look how two-sided the market was, how overlapping not just intraday trade was, but day-to-day trade. So we could go, this may not be much of a top, but if we do go higher, it's likely to be something like this that is very two-sided. And frankly, this is an ideal scenario for a trader. And we will get clues as to what short-term lows could be as the market trades in real time, just as we did during this stretch in here. The same, again, it's a fractal process. The same processes of development are in effect in all degrees of time because we're trading an auction market. Now let's take a look at the cash indices. Okay. All right, this is the S&P, the SPX, and this was what was pretty extraordinary coming into today. We had 1, 2, 3, 4, and then today was a fifth gap. Well, this is the first gap that has been filled since this ramp began in the cash market on the 13th. That's a rate of change, again, that's not sustainable. Now, in the cash market, the level to keep an eye on to the downside is here. This would be the initial level to keep an eye on. I want to know what happens if and when we get to here. Now, if we trade higher, okay, maybe we do, but if we do, it's very likely to be something like this, that's very two-sided and overlappy before you get the air pocket to the downside that's inevitable, or something like this. And what good is this as a trader? Well, you're as an auction market trader, you want to trade market condition. If you can anticipate, and you have some probabilistically based reason to anticipate a certain type of market behavior, then you can fit your strategy and tactics to that condition and to that type of behavior, and you can do really well. So that's what we're doing here. Okay, let's take a look at other stuff, the other indices. And you can see, the Russell closed on its low today, and it almost retraced yesterday's entire range. Now, the Russell is 2,000 stocks. It represents the broader market. The NDX cash market just printed to a new all-time high and then sharply reversed and closed near its session low for the day. The Dow and the S&P are in the same relative position. Now, the other piece of this puzzle, and this is unique to the stock index futures because we have internal information about the auction in the trading the stock index futures that we don't have in, say, corn or wheat or gold or some of these other things. And that's the internals. And I use something that's pretty simple. It's NYSE data. And I use the advancing issues and the declining issues. And down here, you can see that the red line is a plot of the 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And the blue line is just breadth. It's the advancing issues minus the declining issues. And this is a blunt instrument. It is far more effective and accurate at predicting or coinciding and helping us to identify lows than it is highs. But with that qualifier, you do start paying attention when you have significant divergences across all three of these indicators, as we do now. Now, we could turn back up, and if we trade back up for 2 or 3 more days, your very in breadth expands, then you're going to get another market condition that would also be suggestive of an even stronger indication of a slowing of the trend than we have now. So regardless of what transpires, I think that time-wise and price-wise, we're relatively near to a market where the upside, I think the upside from here is fairly limited. And I think that at best, this market establishes a trading range. It would be unusual to see this market just go from here to here. Now, the unusual happens, anything can happen. But as you will find, if you've been following this methodology and you've been following my work for very long, you can, it speaks for itself. You can see how accurate these levels are. And in the report that you have access to links that will take you to past reports. You can validate that yourself. That's why I put the past reports in there. It's the best test of the veracity of the work that you can have. This is real-time stuff. So with that all being said, I'm looking for a more two-sided market. I think the upside is likely limited from here. And even if we do go substantially higher, I think we'll do so more in a grinding fashion. I think and if we do go higher, I think you will see more overlap on a day-to-day basis than we've seen since this move started on October 13th. Okay, I hope you find value in that. If you did, please like the video and please subscribe to my channel. You'll be notified if you do when I post videos. You guys have a great evening.